Hey folks, it's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Also home to the best MJ community. Today is Tuesday, September 19th. Hope you're doing awesome. And in this video, we're going to be discussing Aurora, ticker symbol ACB. There's been a lot of requests from this. I'm getting a ton of people asking me to cover it. So we'll take a look at the chart, some technical analysis. There's also some news out today regarding the Nasdaq, and they received approval. And this is in hopes of getting an additional 180 days to regain compliance. There was some other news I want to take a look at as well. And there's some major bullish patterns that are forming on the chart that we're going to take a look at. But before we get to it, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or whenever I post a new live stream. Bringing up the news here, just before we bring that up, actually, make sure to give Pow Group a follow on X, which is formerly Twitter. The handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So again, the handle for that is @GroupPow. Also just posted a video earlier on today saying who will benefit from rescheduling. And then I go over my thoughts and opinions on that. So who benefits the most from Schedule 3 recommendation, MSOs, multi-state operators, or LPs, licensed producers? So Canadian names or American names. Obviously, spoiler alert, I think it's going to be MSOs. They benefit the most because of 280E, but if you want to go into that video in detail, I'll give my detailed thoughts and opinions on that, and curious what you think of that as well. But let me know what you think of this news. This is the news that came out today. Aurora confirms approval of transfer to Nasdaq Capital Market, enters into an agreement to repurchase a further US $9 million principal amount of convertible notes. And there's been a ton of upside on Aurora lately, and there's been a lot of shares traded in Aurora, Canopy, and Tilray. If you take a look at Aurora on the monthly time frame, it's matching that of Apple. So, and in some cases, CGC and Tilray are actually outpacing Apple and coming very close to Tesla. So that says a lot. And there's a lot of interest in the MJ space. And this is HHS rescheduling to Schedule 3 potentially, and the DEA still has to sign off on it. That would be massive for this industry and really a new frontier in the space. But here's the news. So Canadian MJ producer Aurora, ticker symbol ACB, announced today that they received approval to transfer the listing of its common shares from the Nasdaq Global Select Market to the Nasdaq Capital Market. The transfer became effective at opening of business on September 19, 2023, so today, and is expected to allow the company to seek an additional 180 days to regain compliance with the Nasdaq listing rule of minimum $1 bid price requirement. And as we know, they already did a reverse split 12 for 1, right? So this is great, and it's actually interesting timing because CGC closed just barely above $1 today, and if they do it for the next 3 days, so if on Friday they close over $1 for the next consecutive days, CGC is going to regain compliance, and there's actually a vote on and a meeting for CGC on the 25th, and that one of the proposals in there is the proposal for share consolidation and reverse split up to 15 to 1. So wouldn't that be ironic and just, great timing if they close above $1 for the next 3 days and then they regain compliance right ahead of that vote? And then if Aurora is granted 180 days extension as well, and they just did a 12 for 1 reverse split, right? So this would be massive for the space. That would calm some nerves. And again, if Canopy does it and they get an extension with all of the catalysts that are coming up, we got legalization of medical potentially in the U.S. We got Florida potentially on the ballot. We got ballot for 2024. We got an election year coming up. We've got the MJ Act up for renewal here in Canada. We got Germany coming online. We got individual states as well, more individual states legalizing medical or rec. And then we have safe banking. We have HHS recommendation, right, to Schedule 3, the DEA coming back. So there's so many catalysts that are coming down the pipeline that if Aurora does get an extension and we see Canopy regain compliance by the end of the week, this could send these stocks soaring. And as we know, Aurora and Canopy have been absolutely on fire lately with tons of volatility. It's been a day trader and swing trader's paradise, really. But if you're looking for the long term, Aurora is really starting to right the ship. They're making very, very good progress on their balance sheet. They've been cutting costs, SG&A, COGS, closing facilities, all that stuff. And they're doing really, really good with regards to their debt and cutting that back. And then, like I said, strengthening their balance sheet. And then we also know that Aurora is going to potentially capitalize big on the German market. So additionally, Aurora announced today that it has agreed to repurchase an aggregate of approximately 13 million or US 9.6 million principal amount of convertible senior notes at a total cost, including accrued interest of 13 million or US 9.6 million, satisfied by the issuance of aggregate of approximately 13.5 million shares. Following completion of these repurchases, Aurora will have approximately 39.6 million or US 29.2 million of notes outstanding. So like I said, big improvement there. As previously disclosed, Nasdaq advised Aurora on March 24, 2023 that the bid price of shares had closed at less than US $1 per share over previous 30 consecutive business days, resulting in deficiency with the minimum bid price requirement. And the company was given 180 calendar days until September 20th, 2023, which is tomorrow, to regain compliance. So it's kind of funny, right? It goes to show you how just rigged the market is, right? And stock splits, regular stock splits were created just so that, when Amazon gets 2,000, they split it, and then they use you as exit liquidity, right? There's a reason why it splits at the top, and then it lowers the price and increases shares. This reverse split increases price and lowers shares, and it's just a financial trick for them to, basically manipulate the markets even more, right? But reverse splits are perceived as, negative, obviously, and regular stock splits are perceived as positive, obviously. But like I said, the fact that this is coming at this time with so many catalysts, the charts are saying that we could see massive upside across the whole sector, and a lot of ETFs like MJ ETFs, MSOS, MJ, all of them are showing potential golden crosses, which we'll look at here in a moment on Aurora as well. So Aurora has applied for and expects to receive an additional 180 calendar day period in which to regain compliance with the minimum bid price requirement. Approval for the additional 180 calendar day period is conditioned upon Aurora continuing to meet certain Nasdaq minimum listing standards and Aurora notifying Nasdaq of its intention to cure the deficiency. The shares continue to trade on the United States under symbol ACB. You just see here, shares will not be affected by the transfer, and shares continue to be listed on the TSX, and the deficiency does not affect the company's status with TSX listing. Aurora will continue to actively monitor, and this is something that the US MSOs will have to deal with as well, right? Once multi-state operators are on the NYSE or the Nasdaq, they'll fall under the same requirements, right? So right now it's only the major Canadian names that are on there, which is why we're not seeing that for the US counterparts. The purpose of the notes repurchase transaction is to further reduce the company's debt and annual cash interest cost, reinforcing Aurora's commitment to achieving target of positive free cash flow in calendar year 2024. So that'll be something to look out for next year. Aurora has repurchased an aggregate of approximately $428 million or US $316 million principal amount of notes since December 2021, resulting in total cash interest savings of approximately $32 million or US $24.1 million. The announcement does not constitute an offer to sell or solicitation of an offer to buy any security and shall not constitute an offer, solicitation, or sale in any jurisdiction in which such offering would be unlawful. There was also some news today that Aurora launched bold new brand Tasties into the Canadian adult use market. So you can take a look at that if you want to learn more. But in effort of time, I'm going to move on. So as you can see, on May 11th, 2020, they did a 1-for-12 reverse split, and now they're at the mercy of another one. So the fact that they're getting another 180-day extension is a good thing. And like I said, if Canopy closes above $1 for the next 3 days, it will also gain regain compliance. And Canopy could have gotten an additional 180 days as well. But we'll see. They have until, I think, January 11th it was to regain compliance. So they got some time. And then, like I said, the vote on September 25th, next Monday, for the share consolidation proposal for Canopy. Wouldn't that be interesting if we regain compliance on Friday? But keep in mind, if CGC closes below $1 over the next 3 days, that could send the stock prices lower, and that might affect the rest of the sector. So that's all eyes will be on CGC for the rest of this week. But as of right now, it looks like crisis is averted for ACB stock, and they're going to get that extra 180 days. And with so many catalysts looming, I wouldn't be surprised at all if they did regain compliance organically. But taking a look at the chart here, we are at risk of a daily downtrend with a high, low, lower high, and lower low. So key support is going to be 72.7 cents USD on the Nasdaq. If we lose that, we confirm a daily downtrend and momentum shifting back to bears. But look at this move here off of the low from September 8th to the high there. It's about over 150% of gains, right? So we're seeing this news, and the reason why these stocks are popping is because they're listed on U.S. major exchanges like the NYSE and the Nasdaq, right? When news comes out about major reform in the U.S. or HHS and safe banking, which is a vote scheduled for September 27th, the first thing people rush into is the names that are on Robinhood and that are listed on U.S. major exchanges because they don't have access to the OTC names, right? So this is going to be good. And again, check out this video for more detail on who will benefit from that. But if we zoom out here to the weekly time frame, we're doing something we haven't seen since the run-up in February 2021 highs there to $18, almost $19. We had the bull cross of the EMA 12 and 26 exponential moving averages, and then we had the bear cross with the weekly crossing down through the shorter term, the 12 period, down through the 26, the longer term period. And now we're seeing the flip side of that, where we're seeing another bull cross. That's the first time since the beginning part of 2021 and the end of 2020 when the Dems took control of the Senate, right, on hopes of U.S. legalization. So now we're seeing even more beaten down prices, and look at that volume. We're seeing even more beaten down prices than the last time it happened. So we could see some major momentum shifting here. And take a look at the monthly time frame. We could see an EMA 12 and 26 bull cross on the monthly. So this is looking really good. We're not anywhere close to right now. We still got 9 days, a little over 9 days, a little under 10 days left for the month. So the record amount of shares was 1.591 billion. And so far this month, 884.5 million shares have exchanged hands. So we're going to potentially come up very close to matching a record volume for ACB. In full disclosure, I don't own any ACB. I own it indirectly through an ETF, but I personally do not own any. So this is not financial advice. I will never tell you to buy, sell, or hold, and you should never buy, sell anything because of anything I say or write. This is just my own thoughts and opinions, but full disclosure, I do not own any ACB. I'm liking what I'm seeing. I'm considering it, but I think there is better options out there, not to tweak anybody in the ACB community, but that's just my own thoughts and opinions. But it's going to be interesting. If we take a look at the weekly time frame, we're starting to go parabolic here on the MACD and the stochastic, so that's looking really good, but we're likely due for a little bit more pullback here in the short term. And then if we take a look at the weekly time frame, we are above the 50 weekly there at 80 cents. And then we have some runway until the 100 there at 210. And then if we take a look at the daily time frame, we're actually gearing up for a potential golden cross. And the last time that happened, like I said, was back in February 2021 highs on hopes of the U.S. legalizing and Dems taking control of the Senate. Then we had a death cross with the 50-day above the 200-day moving average. Price went from about $8.50 all the way down to 40 cents, right? And then back here when the golden cross occurred, price went from about $9 all the way up to $20. So now this time around, we're seeing the 50-day below, the shorter term below the 200-day, and when they cross, that's a golden cross. So way more beaten down than we were here, and a lot of our names, right? Tons of names in the space, even our ETFs in the space are seeing golden crosses as well, and that's what we want to see as we look to a major momentum shift. And as I've been saying, we've been looking for a catalyst that's going to knock us out of this multi-year bear market and start a multi-year bull market. And that catalyst, in my opinion, is rescheduling to Schedule 3, maybe even descheduling. We'll see. I don't think that's going to happen. I think the most likely Schedule 3. Safe banking vote on the 27th. But again, I said if I had to choose, I would rather rescheduling because that's going to solve 280E, and safe banking isn't enough, in my opinion, to knock us out of this. And maybe, who knows, maybe we get both. But personally, I think the most likelihood of passing is the Schedule 3 recommendation and sign off by DEA after the recommendation of HHS. But going down it there, let me know your thoughts and opinions. Let me know if you hold ACB stock, if there's anything else that you think that is bullish for ACB or bearish in the short term. Let me know what you think of this news as well. But going to end it there, I did notice that Aurora's products are getting a lot better. But personally, over the years, I've tried their products and I've just been let down. And again, it's not anything against the company. I think they're doing a great job at right-sizing the ship and turning things around. So they are the future is looking promising. And then, like I said, free cash flow positive by the end of 2024 would be huge. But the days of unprofitable LPs are definitely numbered. Going to end it there, though, it's Rod with Pal Group. Thanks again for joining us on the Pursuit of Wealth, and we'll see you again on the next video. Have a great night.